Hello everyone, welcome back to Banking and Finance with Chitrak. Today we'll be discussing the sixth chapter of the anti-money laundering part, which is the AML and CFT legislation in India. So let's begin this chapter. First, we'll discuss about the structure or the topics of this chapter. First, we have the legal framework in India for the anti-money laundering and countering of financing of terrorism parts. Then we'll discuss about the Prevention of Money Laundering Act of 2002, Prevention of Money Laundering Rules of 2005. We'll discuss about the UAPA or the Unlawful Activities Prevention Act of 1967. We'll also discuss about some other acts which are related to the AML and CFT. Then we'll discuss about the guidelines of RBI and IBA, and finally we'll know about some prevention of money laundering enforcement cases. So first we have objectives of this chapter. Basically, we are going to understand the legislation in India for the anti-money laundering and countering terrorism financing and their provisions. We'll also have an idea about the guidelines issued by the Reserve Bank of India and the Indian Bank Association, along with some other laws and some cases regarding PMLA. So, first part is the legal framework of India for AML and CFT. Like every other country, India is also bounded by international guidelines for making some measures for money laundering. As a result, the Prevention of Money Laundering Act of 2002 was formed, and we have PMLA and PMLR. PMLA is the Prevention of Money Laundering and PMLR is the Prevention of Money Laundering Rules. These both of the acts forms the core of the AML regime in India. Then we have the Countering of Financing of Terrorism legislation, which is the Unlawful Activities Prevention Act of UAPA, and it was amended to incorporate the measures which was recommended by the international bodies and United Nations resolutions, and also related to drug trafficking and prohibiting criminal activities which can assist the AML and CFT. So basically what happened is that UAPA, which was passed in 1967, then was amended several times for including different recommendations by the international bodies and United Nations. Some other laws provisions helpful in AML CFT endeavors are found in various laws concerning taxation and foreign exchange. So in different kinds of Indian laws you can find some acts related to the money laundering section. Like in foreign exchange cases, some money laundering section is included there to prevent the cross-border transfer of the illegal activity monies. Then we also have taxation laws where money laundering is heavily enforced upon, because the money which is earned by illegal ways seldom is used for taxing. So as a result, other laws are very important or crucial in respect of money laundering. There is also some regulatory guidance. The FIU or the Financial Intelligence Unit of India advises and gives guidelines for reporting entities regarding the way some reports should be submitted and how to detect suspicious transaction. We know the reporting entities are mainly any entities which deals with finance part, like the banks or the insurance or the mutual fund businesses. All this supports the financial sector of our country, and as a result they are needed to give reports or detect any suspicious transactions. Then we have the sectoral implementation. Different regulators like the RBI, SEBI or IRDA issue sectoral guidelines. Like SEBI issues guidelines for the stock and mutual fund sector, IRDA issues for insurance, and RBI, as you know, for banking. The Indian Banking Association also develops some operational guidelines for the banks to meet the AML or CFT requirements. We'll discuss about the overview of the Prevention of Money Laundering Act. So basically this act was enacted in 2003 to implement the Political Declaration and Global Program of Action Against Money Laundering, which was adopted by the United Nations General Assembly in 1998. This law came into force in 1st July 2005. The main function of this law is to criminalize the money laundering, prescribing punishment, and provide for the attachment, seizure and confiscation of the property which is derived from or was involved in money laundering. And it covers basically two areas. First is the maintenance and submission of information by the regulated entities to the FIU, and then the investigation of the money laundering cases like the search of the property or seizure or collection of evidence or prosecution of the money laundering cases. The main authority of this act is the director of FIU IND, and that person is responsible for enforcing the provisions and anything related to maintaining the records and filing of the information. So the definition comes that PMLA defines the money laundering offence, specifies predicate offences and prescribes obligations for financial institutions and designated non-financial businesses and professions. The applicability is PMLA provisions apply to various entities in the financial sector, like we know banks, insurance companies or mutual funds, stockbrokers, merchant banks and some non-financial business and persons. Now this act has been amended several times, like in 2005, 2009 or 2013, and all of these act and it was done to align with the international standards and enhance or improve the anti-money laundering measures. So what are the main amendments which took place for the PMLA? First was in the definition of the money laundering offence. Definition after amendment included concealment, possession, acquisition and use of proceeds of crime, which was consistent with the Palermo Convention. Then there were some changes in punishment. Now the provisions for penalty includes fine proportionate to the gravity of the offence without any ceiling. Earlier, before the amendment, there was some ceiling, but now there are no ceiling. Also, prosecution or conviction of a legal person like a corporation is independent of or not influenced on the prosecution or conviction of any individual like the employee or director of any corporation. Then there was changes in the investigating threshold. The monetary threshold of rupees 30 lakh for investigating offences listed in Part B of the schedule was removed. Earlier, there was a threshold limit of 30 lakh for investigating offences, but now that was removed. Then inclusion of scheduled offences. Now offences was added from the Companies Act and Customs Act and the Black Money, Undisclosed Foreign Income and Assets and Imposition of Tax Act. The section 12 was amended, which strengthened the reporting entity obligations. So now the regulated entities must maintain the records of all transactions, identify and verify the beneficial owners of the clients, maintain records of transactions reported to the FIU IND, keep information gathered confidential, and sections 11A and 12AA mandated requirements for enhanced due diligence. Also, after amendment, various financial sector entities were added under the PMLA. So earlier some entities were not regulated by PMLA, but now entities like the Forward Market Commission or the commodity exchanges, members of commodity exchange like the commodity brokers, pension fund regulatory authority like the pension funds, recognized stock exchanges under Securities Contracts Regulation Act and the Indian Post of Financial Services were also added. Many non-financial businesses and professions were also added like the registrar or sub-registrar under the section 6 of the Registration Act, real estate agents, dealers in precious metals, precious stones and other high value goods, persons engaged in safekeeping and administration of cash and liquid securities. All these different non-financial businesses were added in the PMLA regulator. Then measures for effective compliance. FIU IND gained more powers to ensure the compliance, including calling for records and information, maintaining confidentiality of requests and imposing a wider range of sanctions on the designated director or regulated employees. There are also a amendment for protection. Now the directors and employees of the regulated entities were protected from criminal and civil liability if they made any disclosure to the FIU IND about their organization. 9 organizations officers were included in the list of officers to assist the enforcement of the PMLA, like the Office Regulatory Development Authority, Department of Posts, PFRDA, various professional accounting institutes like the Institute of Chartered Accountant Institute, Institute of Cost and Works Accountant, Institute of Company Secretaries of India, and registering authorities like the registrar or sub-registrar, registering authority empowered to register motor vehicles were added to assist. Now, what is meant by the reporting entity? Well, it's defined under section 2WA of the PMLA as a banking company, financial institution, intermediary or any person carrying on a designated business or profession. These entities must comply with specific obligations under the PMLA and PMLR. What are the obligations of the reporting entities? The Act specifies obligations for bank, FI and intermediaries under the section of 1213, chapter 4, section 11A and chapter 3. Basically, they have to maintain the records of all transactions for 5 years from the transaction date, adequate for reconstruction. Then report specific transactions of specified nature or value to the director FIU should be given. Verifying the identity of customers and beneficial owners is a must for all regulated entities. Undertaking due diligence prior to the commencement of specified transactions. Maintaining identity documents and business correspondence records for 5 years after the account is closed or relationship is ended. Keeping the information gathered confidential. Provide information called by the director FIU and maintain confidentiality of the request. What are the corrective actions for non-compliance of reports by regulated entities? Section 13 empowers the director of FIU to impose corrective actions against bank, the designated director or any employee, like the issuance of a warning, asking for remedial action, asking for a report on remedial measures taken, and also monetary penalty on the regulated entity or director or the employee, ranging from minimum of rupees 10,000 to maximum rupees 1 lakh for each failure. Now, the offence of money laundering is given in section 3 of the PMLA. It is said that the offence occurs when a person directly or indirectly indulges in, knowingly assists a party to any process or activity connected with the proceeds of crime. This includes concealment, possession, acquisition, use, projecting as untainted property or claiming as untainted property. So, the activity connected with proceeds of crime is a continuing activity until the person is no longer directly or indirectly enjoying the proceeds. So, the offence of money laundering covers not only the Laundering Act but also any direct or indirect attempt to do the same or having assistance or association with such act or the use of claim of proceeds of crime as untainted property. Now, untainted property are those property which has no direct relation with laundering but is bought using the money from tainted property. So, the offence of PMLA is cognizable and it's a non-bailable offence. What are the punishment for the offence of money laundering? And it is mentioned in section 4. The punishment involves the rigorous imprisonment of a term of not less than 3 years and may extend up to 7 years and is also liable to fine. Now, if the offence is specified under the paragraph 2 of part A of this schedule, then the term of imprisonment is extended up to 10 years. What are some predicate offences for the offence of money laundering? The schedule to the PMLA list offences from laws including the IPC, now you know BNS, referred to as schedule offences. The property derived from a crime is considered derived from a schedule offence if it is derived from any of the offences listed, like crimes against state, terrorism, drug related crimes, certain economic property crimes. Also covers offences under the Customs Act 1962 and any cross border crimes. What are some other provisions of PMLA? First, we have the attachment or freezing. Section 5 empowers the director to attach and freeze any property involved in the money laundering actions. Then confiscation. Provisions cover the confiscation of tainted property, irrespective of conviction. It's vesting in the central government and management. Judicial process. The Act sets procedures for trying cases in special court and provides for appeals to the appellate tribunal and the Supreme Court. So basically, any person who is proceeded with the PMLA can try their case in the special court, and then after the judgment in the special court, they can appeal against the judgment in the appellate tribunal of the Supreme Court. And there are international arrangements, like the PMLA includes provisions for reciprocal arrangements with other countries for the attachment, confiscation and transfer of accused persons. Enforcement power. An authorized central government authority can carry out searches and seize records related to suspected money laundering powers and issue summons and also granted. Then overriding effect. PMLA has an overriding effect above any other statute in the law. So this is the first part of the chapter where we discuss about the Prevention of Money Laundering Act. Now in the next part we'll discuss about the Prevention of Money Laundering rules and other related topics in this chapter. Also, the note of this chapter is uploaded in the Google Drive. You can get the link, and to get it you can see the previous videos, or you can comment down below to get the link directly. So all the best for this chapter, and I hope this was helpful to you. Thank you.